How's it going, everybody? It's Doc. Today, we're going to talk about how you can sell monthly options for super easy passive income and how it's better than actually owning dividend stocks. Before we get started, welcome back to the channel. For those that are new here, my name's Robert. I'm a resident physician throughout the day, and at night, I take you on my investing in crypto journey. Really excited about this one. We are going to talk about how you can outperform dividend stocks and make a little bit of a bold claim here. How you can actually outperform this S&P by selling options. If you don't know anything about options, it's okay. I'm going to give you the super simple rundown of it. I'm going to share my screen. Let's go ahead and get started. So, really interesting article here on Yahoo Finance, and they're talking about the top dividend stocks on US exchanges. And I thought this was actually kind of pathetic, right? You're looking at dividend yields of 5 or 6%, right? Citizens in North, they're giving you 6%. Chevron's giving you 4.5%. Dillard's is giving you less than 6%. And for some reason, they're toting this. And I'm thinking to myself, inflation's out of control. You're barely even beating inflation. Put differently, your money, your US dollars, it's a melting asset. So I thought this was really bad. And how a lot of people are misinformed. I see a lot of these dividend portfolios, and I'm not trying to hate, but I think there's much, much better options out there. And how do we do that? We sell options. In particular, we want to sell put options. Selling put options is half of what we call the wheel strategy. I'm going to make a separate video on the wheel strategy. If you're looking forward to that, comment down below the wheel. Selling put options allows you to earn upfront passive income regardless of what the stock price does. Now, if the stock price of the stock falls below your strike price, you will get assigned. I'm going to make I'll show you some examples here. One of my favorite stocks, you guys see me talk about it all the time, is AMD. And I'm going to show you how you can easily sell monthly put options for passive income with AMD. So why AMD? Well, AMD is a competitor to the NVIDIA, and NVIDIA is blowing up, right? Everybody sees NVIDIA. They're going crazy. I think they have a $3.28 trillion evaluation. Crazy. But then if you look at something like AMD, come on, of course this doesn't want to load. Oh no. Well, that's okay. AMD, they have a market cap of like $200 million, which is substantially less. So let's talk about how we can sell monthly options for easy passive income. If you go to Yahoo Finance and you click options, this brings up the options tree. I have selected the January 31st options. And in particularly, I want to look at the put options. So I'm filming this on New Year's Eve, December 31st. This is 1 month away. So we are saying that right now, AMD is priced at 120. If we scroll down to the option tree and we look at this 110 strike price, we're seeing here that we can collect approximately $265, right? We're looking in between the bid and the ask price, and that's between, right, 263, 269. You can probably collect around $265. And why am I saying $265, right? On the screen, you're seeing $2.63. That's because options deal in contracts of 100, right? There's 100 stocks in this one option contract, right? So, okay, let's look at an example because I think this is going to make more sense as we go forward. So right now we're saying, okay, AMD, and we're talking about selling the January 31st put at $1.10. So we were just here, right? $1.10. We're saying you can make roughly $2.65 per option. So if you sell that, you're going to collect approximately $270, right? This price is kind of bouncing around. In this example, I said $270. So we're going to unmask some of this. $270. And you collect this up front, right? Because the person who's buying the put option, right, or selling the put option, the person that's buying the put option is giving you $270 in premium up front. You collect that, it goes straight into your account no matter what. That's up front. Now, we just showed right here Again, I'm on the wrong one. We just showed right here, you're going to collect around $270. Okay. And if you get assigned, it's going to cost you $11,000. Why 11,000? Well, it's $110 at this strike price, and there's 100 contracts, right? So 110 times 100 is $11,000. And that's what you see here. $270. If you get assigned, it would be $11,000. That's a 2.4% for 1 month. Okay. In 1 month, you're collecting $2.40. If you were to compound that over 12 months, that's over 29%, right? We were just looking at dividend stocks and how they pay 4 or 5%. Right now, at the 110 strike price, it's not likely to hit that. Well, why do I say that? Well, if we look at AMD here on the chart, right now it's $1.20. It's actually been falling down. I'm on the day chart. This was at 127 a couple days ago. Before that, last week, it fell down to 117. For us to get assigned, AMD would have to fall down to 110, all the way down here. And it would have to happen before January 21st. So let me just put my cursor there. This is the magic number. AMD would have to fall down that far by January 31st for you to get assigned the stock. Here's kind of the secret sauce about this. If you do get assigned, that's totally fine. That's the second half of the wheel strategy, which I'm going to be making another video on. So follow me along here, because this is actually where it gets interesting. This is if you sold the 110 put for January 31st. Well, what if you said, hey, I really believe in AMD stock. I think they're super under evaluated, right? They have roughly a $200 billion market cap compared to NVIDIA's $3.2 trillion. Well, what if instead of selling this 110 put, what if you sold the 115 put? And you're doing this because you're saying, hey, I'm okay with getting assigned. I think AMD is actually a great company and it's going to do well in 2025. Well, if you sold the 115 put, you'd collect substantially more premium, approximately $4.30 or $430. Yep, I got this all baked in my sheet. So $430. Well, what's that come out to? Now, let's just do a quick thought experiment before I reveal this box. The price, you're more likely to get assigned at 115 compared to 110, right? Right now, the price is at 120. So the stock is more likely to fall down to 115 than it is 110. And because of that, you get a higher premium, right? And we kind of just showed that with our example here, right? Instead of $270 collecting at a put price of 110, now we're saying in this example, it's a strike price of 115. This is where things get awesome. That's 3.7%, again, in 1 month. If you annualize that over 12 months, right? This is compounding every month. It's over 43%. Again, gnarly. This is just you collecting premium. Let's say you did get assigned and the stock price went up in value, it's going to be over 43%. So this is the AMD example. I actually really, really like this stock. I'm going to make a video on this. If you're interested in me seeing me make a video on AMD, leave me a comment down below. AMD. I think this stock can do really, really well in the next year. Let's go back to the monthly chart now just for fun. Yeah, in the beginning of the year, this was like 180, right? And this is just the Bollinger Bands here. Typically price stays in between the Bollinger Bands. So I would not be surprised if AMD got back to $180. Right now it's 120 by the end of the year. Okay, so you think that was cool. Let's talk about Tesla. Right now, Tesla is 403. And I'm going to get to the daily chart. And of course, I need to redo all of this. But Tesla's gotten beat down a little bit. This is the best time to sell put options when the stock is down. So let's look at the option tree. Again, I'm on the January 31st, so a month from today, because I'm filming this on New Year's Eve, and we're looking at the put contracts, okay? The put contracts. If you sell the January 31st put at $3.70, you're going to collect approximately $1,625, right? You're going to sell this put, and the premium that you're going to get up front is $1,620. We do some simple math, right? 1,625 divided by 37,000. Why did I choose 37,000? Because our strike price is 370. If you get assigned, it's 100 shares, right? So that's 37,000. If you do the math on that, that's 4.4%. Again, in 1 month. In 1 month. If you annualize that, compounded every month, it's 53%. A lot of folks are saying that Tesla is going to 600 in 2025. And I tend to believe that. I see some people saying 650. Think about it like this. Elon Musk played a pretty big role in getting President Trump elected. I don't think it's wild to say that Trump is going to put policies in place that could potentially help Elon. So I think this selling options is a great strategy. Yes, I did the math on all of these. All my numbers are correct. It's way, way better than owning dividends. Hence the title of this, Better Than Dividends. So I get it. Dividend stocks are easy. You buy them, they pay you out your dividends. It's not a whole lot of mental bandwidth goes into it. My argument here, or my thesis, is selling puts, these options are actually very easy. You do it once a month. It probably takes you 5 minutes, and you can collect substantially more, right? We're talking over 29% for 5 or 10 minutes of work per month. Very, very straightforward. Okay, so selling put options is what we just talked about. This is half of the wheel strategy. The second half of the strategy is just selling covered calls once you get assigned. I'm going to make a video on that within the next week. If you're excited to see that, give me a thumbs up down below. The last thing that I want to talk about is, you guys probably know me as Doc Degens. Well, I'm doing it sounds weird saying this, but I'm doing a little bit of rebranding. Instead of Doc Degens, I'm now Invest with Doc, right? So I changed my Twitter name. I got a fancy new banner picture here. I'll get my check mark back anytime you change your name. They review your check mark. So same thing on YouTube. Oh man, I thought I refreshed this. Well, my YouTube, Invest with Doc. I'm going to change the banner too. So in this video, we talked about how selling options outperforms dividend stocks, and it's absolutely not even close, right? The first half of the wheel strategy is selling puts, and that's what we went over today. In my next video, we're going to talk about the other half of the wheel strategy, and that's selling covered calls. If you guys like this video, feel free to give me a thumbs up, comment down below, and if you're open to it, feel free to hitting subscribe. It really does help me out with the algorithm. I will see you guys back on my next video. Thanks.